Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our Metals and Mining Conference. Our next presentation is from Cerrado Gold. And Cerrado Gold is a Toronto-based gold production, development, and exploration company focused on projects in South America and Canada. At this point, I'm very pleased to welcome Mark Brennan. He's the Chief Executive Officer and Chairman of Cerrado Gold, which trades on the OTCQX Best Market under the symbol CRDOF and on the TSXV under the symbol CERT. Welcome, Mark.
Thank you, John. Thank you very much for having me. And thank you, ladies and gentlemen, for being present for this presentation. Again, we're Cerrado Gold. We're a company that's building shareholder value and looking to drive substantial cash flows. I'll provide you just with a customary disclaimer of forward-looking statements. I'll allow you to read that at your leisure. Cerrado Gold is a diversified development company of what we believe are very, very strong assets. Our lead asset currently is Minera Don Nicolas in Santa Cruz Province, Argentina. This is actually a producer of gold, about 50,000 ounces for the next 4 years. Our second project is Lagoa Salgada, a development project in Portugal, just outside of Lisbon, where we're looking to produce about 34% precious metals and the balance in critical minerals. We're expecting a construction decision in November of this year, with the construction starting sometime in Q1 of 26 and production in second half of 27. We have another very large iron ore project in Quebec in Canada. This project is an iron ore, high grade, high purity, DRI grade material. It's a very large project that we see as coming naturally now into our pipeline following the development of our Lagoa Salgada project in Portugal. As I mentioned, currently we're 100% producing precious metals. As we bring Lagoa Salgada to fruition, that'll move to about 62% precious metals and 38% critical minerals. And those critical minerals will be copper, zinc, lead, and tin, as well as potential vanadium. We're seeing exceptional growth through the development of these 3 assets. As I mentioned, we're producing about 55,000 ounces of gold in Argentina today. Our expectation is by 2030, we'll be producing the equivalent of 328,000 ounces of gold. And the objective that we have here is to do this with very limited dilution. And I'll talk to you a little bit about that as we move forward. But obviously, based on our NPV, based on our cash flows, we've got a very compelling story for the next 2, 3, 5 years down the path. As I mentioned, we're really focusing on cash flow generation. We're currently expected to generate about $45 million per annum of cash flow for our current project at MDN. Basically, that should generate about $25 million of free cash flow, where we're also looking to produce something in the region of about $80 million a year in Lagoa Salgada, starting production in Q2 of 27. And from there, we're looking to develop about $350 million of cash flow from Mont Sorcier as that comes on stream in 2030. So a very compelling story. We've got a good growth profile ahead of us with projects which are very manageable and somewhat easy to bring into production. It's, mining is never easy, but these are fairly straightforward projects where we're no longer, we're not reinventing the wheel. These are just projects that are pretty common and well known how to produce and how to develop. Again, our current axiom is we're looking at steady state production of gold over the course of the next 4 years, generating around $50 million a year of free cash flow, of cash flow, and about $25 million a year of free cash flow at $2,100 gold. At today's prices, we're probably closer to somewhere in the region of about $40 to $45 million. And we're developing Lagoa Salgada. This is a polymetallic project in in a very good jurisdiction. We have a project of national interest, getting the very strong support of the Portuguese government and the EU. And from that perspective, we expect this to be a project that will start at a run rate that'll only be expanded as we move forward. Again, I mentioned Mont Sorcier. This is a very robust project based out of Quebec, looking at producing 5 million tons per annum of 67% iron concentrate. And this is the highest grade, highest quality type of iron ore you can produce, which will be going into the DRI, or direct reduction in iron market, and qualifies under the green steel transition that most iron ore companies and steel companies are looking to move into. We will have a construction decision there in 2028. Further to our production in Argentina, which is currently 55,000 ounces a year expected over the next 4 years, we're looking for some very strong expansion potential. The asset has really been post-COVID and beyond. It's been really waiting for the strong cash flows to come in order to drive its exploration, and those cash flows are now here. We're looking to go underground starting in Q2, and that underground should really drive some substantial cash flows moving forward, and more importantly, in the longer term, look to drive really strong resource growth. We're well funded. We have $21 million in cash at the moment. This will be supplemented by our $25 million of free cash in Argentina. But we're also looking to bring other cash in from the sale of our Brazilian asset. We're due about $15 million there. We also have another $10 million on an option to Anglo for a project outside of MDN. And I guess in terms of we're going to use that cash flow to drive and finance the projects that we're looking to develop, and looking to minimize dilution as best we can. If I look at Minera Don Nicolas, I mentioned we're looking at a base case at $2,100 gold of NPV of $111 million. Average annual EBITDA or cash flow of about $50 million, free cash of $25 million. At today's prices, using a $2,890 spot price, that project will throw off about $87 million of EBITDA and about $50 million of free cash. So lots of leverage to gold price moving forward. As gold prices move higher, this project we expect will generate a lot more cash for us to develop our projects, and more importantly, to go and grow our resource base in MDN and Argentina. We've got a life of mine average EBITDA of $87 million and free cash flow of $49 million, as I mentioned at current prices. We are looking for a heap leach development to drive most of that cash flow. But as I mentioned, we are looking to go underground, and the underground will be an area where most other mines on the Deseado Massif in Santa Cruz, Argentina, have really grown their production. So we're the young guys on the block. We are the lowest cost producers currently in Santa Cruz, which speaks volumes, I think, for a small company. But at the same point, our history is just starting. We really see strong potential to make this a very substantive mine, like our neighbors, like Cerro Negro, that has 7.5 million ounces, like Cerro Vanguardia with Anglo, that have basically produced about 8 million ounces to date. We're in a very good jurisdiction, good real estate, to find lots more gold, and that's our objective for the next year. Looking at the company, we are now looking to acquire. We announced the acquisition of Lagoa Salgada a couple of weeks ago. The reason to acquire this project, first of all, it's a wonderful project. It's a world-class asset that we think can grow very dramatically as we move forward. We're going to be buying 80% of that project that has a current NPV8 post-tax of about $150 million, with a 39% IRR post-tax based on a feasibility that was completed in 2023. This asset is a low-cost asset. We're anticipating in the first 5 years of production and then beyond a 59 cent per pound zinc equivalent cost, which makes it not only in the top quartile, but probably in the top decile. So from that perspective, a very strong asset to have. We're expecting to see a environmental approval in Q2, so probably by the end of March. And then we're optimizing currently a feasibility study that we expect in Q3 with a construction decision in Q4 with production coming in the second half of 2027. So that's coming down the pipe. We believe that not only is this a great asset, but at the same point, we're getting this asset moderately cheaply in terms of our cost of acquisition. We think that this asset a year from now, once we're looking at being in the construction mode, will be valued at a multiple to where we are today, which I think will be a win-win for not only Cerrado shareholders, but also for Ascendant shareholders, because Cerrado is also undervalued. We're trading a little bit more than our cash position now, but not bearing into account the strong assets that we have and the cash flow that they'll be able to generate. We're currently fully funded to the construction decision. We anticipate it'll cost us less than $5 million to deliver the feasibility study and get to a construction decision. Cerrado is well funded for that. And from that perspective, once we get to that decision, we anticipate that the groups who are supporting us currently, the UK Export Credit Agency called UKEF, who are using Banco Santander as their lead arranger. They're looking to help us fund 70% of our project finance. We've had Sprott, Streaming and Royalty, who are looking to help us in terms of adding to the capital stack. And then we also see potential for off-takers to provide us with capital that should really minimize the amount of equity capital that will be required. With our $21 million cash position, we anticipate that we'll have more than enough cash to contribute the equity that's required. We've spent a lot of time considering whether it was the right timing to look at acquiring this asset in terms of acquiring Lagoa Salgada. We have done a tremendous job in terms of reducing our debt, improving our balance sheet over the course of the last 9 months. And we believe we're in a very strong position where even where we're looking to expend money on bringing this project to a construction decision. We're also looking to bring Mont Sorcier in Quebec, complete a feasibility study in Q1 2026. We expect that our cash position will be flat, or maybe even a little higher with today's gold prices following the completion of all these programs. So this acquisition was not done gratuitously. A lot of thought went into it. And from that perspective, we do not feel that it's going to hinder our financial position moving forward. So with that, we've got a strong growth profile with the 3 assets that we have. As you've seen earlier, these projects have the ability to generate very strong cash flows, which will put us in a position, in our view, to be a multi-billion-dollar company moving forward. Just in terms of the acquisition, because it was announced so recently, we're ultimately paying 27 million shares for the asset of Lagoa Salgada. Again, we believe that it's a very astute price to be buying the company at, particularly because we're undervalued as well. And again, I think it's a win-win situation for Ascendant shareholders, as they will benefit from our being undervalued today as well. So from that perspective, the type of size of company you're looking at post-acquisition, we're moving to about a 1.8 billion NPV value based on current PEAs, feasibility studies, and 43-101 studies. So we think we've got a long way to go, and with a really strong production cycle. Looking at our combined entity on the production side, we're looking at basically 2 assets, which will generate about 62% of them will be precious metals. Lagoa Salgada is precious metals heavy with 34% gold, silver. Then we move 30% zinc, copper, lead, and tin. So a true polymetallic project with a very strong feasibility dynamic when we published that report in 23. Again, a post-tax NPV of $150 million with an IRR of 39%. That through the optimized study that we're completing now, we see this to be actually greatly improved moving forward. That should generate for us north of the $75 million a year that we had in the previous study. Again, it's a low-cost project, low CapEx project, which makes it very feasible for us to drive into a production mode moderately quickly. As you can see in the bottom right-hand corner, here we are with one of the lowest costs producer over the life of mine at 79 cents. For the first 5 years, that'll be about 59 cents. And we hope that actually that first 5 years with the optimization we'll doing now is actually going to remain somewhere around that 59 cents. But also what we've had at this project is there's been limited exploration, about 40,000 meters of exploration drilling done on the project, uncovering about a total resource of about 27 million tons. And the ratio of drilling to tonnage has been very successful. We've had some of the best results on the pyrite belt, which is a very prolific area for historical mining. And we believe that we'll be able to grow this project very dramatically as we move forward. Again, here's a timeline we've spoken to. Exploration drilling really is now giving over to completing the feasibility study. It'll be led by the fantastic work that's been done on the metallurgical work that we're working on now. We're seeing improved grades, we're seeing improved recoveries, we're seeing optimized flow charts. So from that regard, we're seeing very, very positive economic benefits from this updated metallurgical work. That'll follow with a resource estimate, a new resource estimate, which will largely be the same. We should see some addition to our tonnage. However, it'll largely be the same. It'll just be of a much higher value. That'll lead to a feasibility study in July. This will encapsulate and incorporate our optimized optimization of the feasibility study, things like moving from conventional tails to dry stacking, moving to a portable paste fill plant from a fixed plant. These things will have a dramatic impact in bringing our costs down. As a matter of fact, what we're looking at is one component where we're moving sand from our operations will reduce our OPEX by something in the region of about $9 a ton. So from that perspective, we expect to see really strong improvement in terms of the updated feasibility study. And then following that, I mentioned we'll have our environmental permit approved in the second quarter, and then we expect our construction approval in the fourth quarter of 2025, which will lead obviously to construction and development of the project by second half of 27. At Mont Sorcier, this is a tremendously robust project in Quebec, a very good jurisdiction for mining. Again, over the course of the last year, we've spent our time developing this asset to become a green steel producer. We've been working very closely on metallurgy and mineralogy, which has led us to a point where we're very confident that we have the ability now to produce a green steel. This will mean about a 67% iron ore project with high purity, high grade, and again, just extremely strong, robust economics. We'll have less than 2.5% silica and alumina, which will mean that we'll see a tremendous reduction in terms of penalties moving forward. This project in the previous PA that we completed in 2022 showed a cash flow of $350 million, free cash flow of $235 million for 21 years. Now that was done in 2023. So there'll be a little bit of inflation from the 400 odd million that we were looking at, probably with contingency about 600 million. So we could see some inflation there, but any addition that we'll see in costs will be more than compensated by moving from that 65% con grade up to the 67% premium that we're receiving. The project hosts in Quebec, is very close to the town of Chibougamau. We have rail, port, hydro, everything to really enable a low cost CapEx project, which will again make this project extremely robust. On the numbers that we have here, we're only using about 25% of our resource, so there's plenty of opportunity to expand and drive these cash flow numbers even higher once we start the production anticipated in 2030. Again, we're expecting a feasibility study on this project to be completed by Q1 2026, and we're looking for very strong, robust economics. This project as well has been supported by the UK Export Credit Agency called UKEF. As a lead arranger, TD Bank are supporting, and they've been very, very strong to date. So very helpful with our needs to date. The interesting dynamic within the iron ore industry is that the steel industry, the iron ore industry is growing perhaps by 1 or 2% per annum. However, this high purity iron concentrate is growing, north of 10% per annum. So from that perspective, we see a very strong high growth market that we're looking to sell into, with what we consider to be a project that will throw off substantial cash flow using an all-in cost somewhere in the region of about $45 US. So from that perspective, with iron ore prices trading today at $107 for 62 Platts iron ore, not even 67%. Again, this project is going to be extremely robust. I just highlight again, we're well funded, $21 million in the bank right now. We have potentially another $15 million as part of the sale of our Brazilian asset. There's no terms or obligations that we have to fulfill. It's only a time obligation where $10 million will come in June of 26, and $5 million will come in March of 2027, or earlier if there's any way that we can monetize that on a quicker basis. Also, we have, based on our option to Anglo Gold of our Michelle property, which is in just south of our project in Argentina. They've paid us $4 million already. And if they exercise that option by the end of 2027, that's another $10 million that would be due for consideration of that option exercise. So combined with our operating cash flow, again, which is another $50 million of cash flow, $25 million of free cash, we're in a very, very strong position to develop these projects that we have without dilution. Again, our mantra that we've had for the last year or 9 months has been reduce debt, get our balance sheet into a very strong position. And now, as we're moving into the growth phase, our mantra now is do everything we possibly can to reduce dilution, make sure that we don't have to go out there and issue a lot of shares to shareholders. Again, we're supported a little bit more on the Export Credit Agency supporting. Sometimes people shake their heads a little bit on this. What we're looking at is the UK government are involved in supporting the project at Lagoa Salgada on the basis that what we do is we have to provide 40% of our capital equipment services from the UK, whether that's a subsidiary elsewhere, but basically UK-oriented companies. So our expectation is that we'll see a long-term, low-cost funding, SOFR plus, 1.5 or less. The nice thing about these types of funding is they generally tend to have a longer tenor. And the governments actually tend to work with you over long periods of time to help you expand your projects, to grow your projects. And so from that perspective, we're very excited to be working with UKEF and bringing this project on stream. Again, I mentioned the obligations we'll have is UK content of product, services, or equipment to the tune of 40%. And there's a very strong ESG component here where we have to adhere to equatorial principles and all best practices for developing a mine. We've got a team who built, developed numerous projects. We started together in 2002 with Desert Sun Mining in Brazil. That project was an old Anglo project that was sold to Yamana Gold for $700 million in 2006. Subsequent to that project, the team went and they built a company called Largo from, again, a hole in the ground. There was no, from inception. That project actually is the highest grade, lowest cost producer of vanadium to date, and at one point had a market cap of about $2.5 billion when vanadium prices were high over that 2018 type of period. That said, after that, we went on to create Sierra Metals. Sierra Metals provided about 2.5 times return. excuse me, for shareholders in just under 2 years, where we went from a 200 million market cap to a 600 million market cap. So we have a team who are very competent and very able to take projects from its infancy and develop them into mines. And that's what we fully intend to do with Lagoa, and then following Lagoa with Mont Sorcier. We're trying to do this as best we can with minimum dilution, as I mentioned. The acquisition of Lagoa is going to cost us about 27 million shares. We think, at the prices in which we're acquiring it, it's a very good value for not only Cerrado shareholders, but also Lagoa shareholders, for Ascendant shareholders. We see our position of being able to grow the company without diluting too many more shares going forward. So in summary, what we have is a company that has a very strong, steady production of gold, 55,000 ounces over the next 4 years that we're looking to hope to grow through exploration and expansion. That'll be the catalyst for developing Lagoa Salgada. Again, what we anticipate being a world-class project on a world-class belt, where most VMS projects have come from. It's still in its very early stages. And then we see Mont Sorcier in Quebec, being located in a fabulous jurisdiction with fabulous infrastructure, with a very nice mine, with very nice deposit, that we're going to use for 21 years, generating 25 million tons of iron ore concentrate, high-grade iron ore concentrate, that can be expanded very dramatically, as we're only using 25% of our resource. Again, MDN in Argentina, we see lots of potential for expansion there as well. And again, the important thing is we believe we've got the cash flow and the cash flow generation to keep these projects growing and developing, hopefully beyond the numbers that I provided to you in the beginning, talking about net present value or net asset value growth, as well as our cash flow generation growth. So from that regard, we view the value of our company at this point, we think is kind of a little bit difficult to understand, let's put it that way, on the basis that we're trading at about a 40 million market cap, with about 30 million of cash, and then all these strong assets to grow the company going forward. We think we've got a tremendous journey ahead of us, and we'd love to have you join us on this journey.
So I'd like to move to a Q&A at this point. I'm going to just take the questions as they've come in. I guess the way it works here is that, so I'll just take them one by one. I guess in terms of the first question is, can you discuss what gives you confidence that the heap leach operations will successfully ramp up in a timely manner? They are ramping up. They're ramping up very strongly as we speak. We're north of 100 ounces per day on average production there, which is about 3,000 ounces per month. The biggest issue that we have with the operations in terms of the heap leach ramping up is really being our construction. Has been the crushing, excuse me. And it takes time to drive this, but at the same point, we are seeing the results that we need. We're anticipating that we'll be at about 4,000 ounces per month by the end of May. And from that perspective, we expect that everything else will be fine. The elution circuit is working well. All elements of the heap leach are moving well. It's just a question of how many tons can we put on the pad, and that's driven by not by the mining so much. The mining's been pretty straightforward, but it's really driven by the crushing. We need to get 10,000 tons per month, 10,000 tons per day, or 300,000 tons per month through the crushing pad onto the leach pads, and we're moving to that. And right now we're running about 270,000. So we are moving that progress, substantial progress on that. I guess in terms of how many holes are pending in Portugal copper drilling and how many holes are you going to drill there? Right now, the biggest objective is for us to drive the production profile that we're looking for. We want to get this project into a construction mode, construction decision by the by the fourth quarter. We do expect that we'll have a couple of holes that we've drilled to date coming out in the next few weeks. We're just waiting for some assay results. We anticipate that they should be quite good holes, as we've always seen at Lagoa. Lagoa has always provided very good results, and frankly, some of the best holes on the assays that we see on the pyrite belt. So we expect that perspective to continue. But again, the real focus on Lagoa will be now to get this asset to production, but we will also look to drive our exploration program. We are doing a major seismic survey starting in March. That should be completed by the end of April. This is a European initiative for underground, for looking underground, and so it'll be sponsored by the EU. And from that perspective, we expect that once those results come out, we'll see some really good, strong visibility on where the best places to drill are. So I would expect that we'll see, again, another strong period of drilling starting in once we get those results back, and once we conclude the acquisition in April, May period. We are expanding our resources in Argentina. The next question is, are you currently drilling to expand resources in Argentina? We are. We think that we've got very, very strong potential there. We've actually just engaged a couple of fellows to come in, very, very senior, experienced fellows to come in and help us with that. And I think you'll be seeing, again, underground development taking place very shortly. And then looking to drill. We have our own rig coming in. We're acquiring a rig, which will come in probably sometime towards the end of May. And that'll give us a lot of capability to do a lot more drilling than we've done so far. Next question was the big land package that we have in Argentina. Will we look to sell more, as we did with Michelle? We sold Michelle an option to AngloGold for $4 million with an additional payment of $10 million if they want to continue to acquire that property. Basically, we don't see at this point that we'll be selling any more areas of our land package. We really want to go in and look to grow it. But again, the sale of the option, we were never going to develop Michelle. It was always too far away to bring to our plant, and it was always the natural solution to have Anglo put it through the Cerro Vanguardia plant. What happened to the equity buyback program? We halted that when we announced as we were doing the acquisition. Once the acquisition is concluded, we'll look to restart that program. Again, another question on the buyback. We fully believe in buybacks. We think that our shares are very, very cheap. Once the acquisition is completed, which we expect sometime in mid-April, we will certainly go back to the buyback programs. The next question, will we increase gold production in Argentina in the next couple of years? We believe so. We're targeted, and we've provided guidance of 50,000 to 55,000 ounces. Our expectation is that we should supersede that this year, but for now, we don't have that definitive. So what we would say is we will look to expand not only in the next couple of years, but hopefully in 2025. Will drill results be released soon? I assume that's towards Lagoa. We're just waiting for assays on the second hole to come back, and then we hope to be able to drill that. Currently, next question is about cash and how much will be collected from the sale of Monte Carlo. Currently, we have collected $45 million of $60 million, and we have another $15 million to come. We also have potentially another $10 million from the option of our Michelle project to Anglo. So we believe that there's a strong possibility that $10 million will be exercised. So we have a guaranteed $15 million coming in over the course of the next 18 to 24 months, and we hope there'll be another $10 million coming before the end of 2026. Another question on buyback. In terms of our debt, we're asked about our debt. One of the things that we've done very substantially over the course of the last 9 to 12 months is we've been cleaning up our balance sheet and been bringing our debt very substantially. So I think as we report our year-end results, you will see a very substantial reduction in debt. And again, that has been our number one priority, has been to get our balance sheet stronger and make our balance sheet stronger in order for us to move forward with our growth development. The resource update on the MDN mine, I've been asked. Basically, that resource was completed. We did the PA, and in that PA, we did have a new resource which showed approximately 490,000 ounces of measured and indicated resources and 110,000 ounces of inferred. And one can look at the PA for that resource. I'm going to hold the questions there. I think just to conclude, I think many of the questions are somewhat similar. I think in terms of again, to highlight, we've had some significant developments with respect to our company in the last year. Obviously, to sell MVC, we were in a position where we had a wonderful asset. It was a very strong asset, but unfortunately, due to the inability of markets to raise money at the time, as well as the issues that we were facing in Argentina due to the devaluation of the currency, meant that in order to continue our strong growth track forward, we had to sell that asset. That said, we're now in a very, as a consequence of the sale, we're in a very good, strong position to drive Argentina, to drive Lagoa, which I see as somewhat of a replacement for Monte de Carmo. It is a very strong asset. Will generate, prior to the sale of Monte de Carmo, we were looking to generate about $85 million a year. Lagoa will generate over a 10-year period, an 8-year period, excuse me. If I look at Lagoa, we're currently looking at a $75 million for the first 5 years, but we see that as growing. We'll be able to show evidence, we believe, of that growing even when we complete the feasibility study in July of this year. We will also be able to use the funds from Argentina and Portugal to drive Mont Sorcier, which we think is again a phenomenal asset that we've taken to a DRI, high quality, high grade, green iron ore that can go directly to reduction in induction furnaces. It means you get a premium of 25% over existing quoted iron ore prices. It is a very, very robust project which will produce for 21 years with cash flows of about $350 million a year. So we have now 3 assets in place that can drive what I would believe is very strong cash flow, strong exploration potential for growth, but also strong value for shareholders. And that is the objective that Cerrado has. We have to be focused on building what we would like to build as a world-class company. And I think with these 3 assets, we have that. So thank you very much. I think I've taken up all the allotted time. I'm very happy to address any questions that people may have. One can reach us on our website. There are direct links to there. Likewise, one can reach out to myself or to Mike McAllister for any questions one may have. Thank you very much, ladies and gentlemen.